Hello, this is Coach Mike from WinningStockCoach.com. I'm going to start out with my weekly market overview video for the first full trading week of May 2015, the week beginning May 4th. So, SPX actually kind of rallied pretty good at the end of the week. Still kind of that first Fibonacci target that we've had for a little while that we talked about. Well, you don't really have to look too hard to see what that looks like. It looks like it hit it and then went red from it. So that doesn't necessarily mean it has to fall, but we saw the same type of candle with a large lower wick here, and yep, it ended up going lower. We saw that same type of candle here, and yep, it ended up going lower. But the reality still remains that we still have this support level here on the SPX 2053.40 that pins us into a real short-term mentality for any of our short trades. If we do continue higher and break this 2120.67 area, we can think a little longer term for a market swing up to that 2178.38 range and be a little more successful. Now remember, that might not look like a lot here, but stocks go up when the indices let them go up. And even though not every stock falls when the indices falling, they typically at least stop going up. So the rate at which they could go up is much, much different. But, you know, the accuracy we've had for a long time now is with sticking to some very, very simple disciplines that have saved us a lot and have prepared us very, very well. In last week's video, when I discussed the DJI, the Dow Jones Industrial Average, we talked about the consolidation range where the SPX had kind of broken above it, but the Dow had not. And guess what? We're still within it. It's not a lot of money to be made in sideways. Wait for the breakout, either above or below the consolidation range, and that'll be your swing entries. The Russell 2000, the RUT, this one was actually kind of the funky one this past week, because where the other indices kind of rebounded on a bit of a fall, the Russell didn't very well, and it actually made a larger percentage fall than the other indices did from high to low. In fact, it ended up losing this weekly swing high point we talked about over the past few weeks, that 1233.37, and at the same time held firm on our previous support level of 1215.21. So really, really simple with your small caps. 1215.21, that's what you need to be watching as your support. Should your support hold, you will have a pretty decent risk to reward ratio for a long trade. And if your support fails, you actually have a really, really good risk to reward ratio on the short, down to what I would believe would be a double bottom here and then a lower high to give a head and shoulders. We see so many charts right now on the weeklies setting up head and shoulders. Matter of fact, I'm just going to switch over to a little Chinese stock, Vidoe, and we actually saw the head and shoulders fail. I'll go ahead and mark this one up for you here while I'm doing the video, but you'll see the head and shoulders pattern. This would be the head up here, that coveted neckline right here, and the shoulders didn't quite get up to it, but still the same effect. You don't get a textbook example when you apply it to reality. So, you know, where it is here, failed that neckline at the close, and we're seeing a lot of that in many, many stocks. This is just one example. So when I go back over to the RUT, which we've talked about over the course of the entire last year, where it has lagged by 2 to 4 months, which would actually make a lot of sense for it to fall fairly decent, come back up into this area, and then seeing what the market's doing there. The rest of the markets are doing at that point in time. Over now to the NDX, the NASDAQ 100. You know, this one actually did fairly well compared to the other indices. And I really think it was because of Apple's super hard charge on Friday that it was still able to come up and close above that support point. I would be looking for some of your big name technology stocks that are held within the NDX. If they move positive on Monday, your risk to reward ratio is pretty darn good to where your stop would be at 44.58, 54, and for the target areas being here around this 46.90 or 47.25. This is Coach Mike with winningstockcoach.com, keeping it kind of short and sweet on the market overview video just because it's very, very simple for this upcoming trading week. Good luck to you in the upcoming trading week, and God bless.